In this video, I interviewed Dr. Giovanni Santostasi, the creator of the Bitcoin Power Law model. Giovanni breaks down what the Power Law model is and why every Bitcoiner should understand it. He shares his thoughts on when the next bull run might start, how long it could last, and gives his estimate for Bitcoin cycle top price in 2025. He also reveals when he believes Bitcoin could hit 1 million and 10 million per coin. Since the first part of our conversation is in depth, feel free to use the timestamps below to jump to the sections we are most interested in. I hope you enjoy the interview. Hello everyone, welcome back to Lab4crypto. Today I'm very excited to welcome Giovanni in our channel. He's the creator of the Bitcoin Power Law model, which I spoke a lot of times in my channel. He's the father of the Power Law model. And today we are going to tackle some questions that many of you asked me to ask Giovanni when I told you that I'm going to have an interview with him. So let's dive in immediately. And we hope that you're going to enjoy our talk. So Giovanni, welcome to Lab4crypto.
Thank you.
So can we start with a brief overview of the Bitcoin Power Law and why it is important for everyone that is thinking to join the Bitcoin, let's say, community, and also as an idea to put some of his capital to Bitcoin, and start explaining a little bit the importance of this model.
So first of all, I wanted to say that I'm very excited to talk with you because you are a fellow PhD physicist and we speak the same language in many ways. So that is really very exciting for me and an honor, to be talking to you. So anyway, the idea is it's basically, this is where my first slide is, we're sharing with your public that differently from many other analysts, I'm trying to look at Bitcoin like if it was a science, like if it was the data that we get, because we get a lot of information about Bitcoin, not just the price, but also all the on-chain information like hash rate and addresses, transactions, all a trove of information. We can study this system like if it was a science, like if it was some kind of natural phenomena, like in physics, right? We want to understand how quantities relate to each other, with all the different important quantities. And, that is one of the differences between what we do and what many other people do. So we stay in this program, in this way of understanding Bitcoin, and we look at some of the fundamental quantities, right? And one of the most important that people pay attention is how price changes in time, right? First of all, here for time, I'm using this idea of counting time from the day that Bitcoin was born. So when you see these days here, this is days from January 3, 2009, that is when Bitcoin was born.
So the beginning of time, the Big Bang, let's say, for Bitcoin is where it was first, the first block was mined, basically.
Correct. That date is January 3, 2009. I don't remember the time, but I think around 12. Then you count the days, you can count minutes, you can count years, whatever you like. But that is, it's like the Big Bang. Mm-hmm. Today we are more about, and you can always go online and you can ask. I do that often. I ask ChatGPT or maybe Google, say how many days are passed by from January 3, 2009, and right now, today, for example, is 5,700 something day, and then you plot the price, right? And most people in the communities maybe are used also to look at the log of the price, but many of the TV channels, we talk about finance or whatever, they use the linear price. They use to show this chart. And I don't know if they don't do it because they are concerned that people don't understand logs, or maybe they want to show Bitcoin in a bad light. Because if you look at this chart, it looks very, very, it doesn't look like there is a precise pattern, right? It looks like it's very disorderly.
And they will be right if they see it in linear scale. Even for us,
Yes.
this does not make anything. We need to start digging a little bit more to try to understand what lies behind this chart.
Exactly. So that is one of the things we do as a physicist, right? So even when I teach my students, when I was a college professor for several years, I will say, look, the first thing you want to try to find when you study data, right? Because as a physicist, we go and explore the world, right? We find a phenomena that we are interested in, and we start to plot some of the quantity that we measure. It could be pressure and temperature. It could be, how bright a star is versus the size of a star. Different kind of things. You want always to find some kind of relationship. Hopefully, maybe it is something so simple that you can write an equation down. That is kind of a dream of a physicist, right? My countryman Galileo was saying that nature is like a book, and this book is written in the language of mathematics, right? So we would like to describe the phenomena that we study with mathematics, and if it is possible, if there is a relatively simple relationship, then maybe we can write an equation. I could not write an equation looking at this graph. It's so disordered, it doesn't seem there is any pattern. And so, we are not that lucky in this case, right? Sometimes it happens, your data is so simple that maybe there is like a linear relationship, right? There is a proportionality between the price, let's say, and the time, but we don't see it here. It's very disorganized. And it's a little scary because if you show this to an investor, maybe you can think, rightly so, right, that, Bitcoin went to 70,000, then it crashed to 16. How do I know that it's not going to, one of these days, going to crash to zero, right? So it's something that doesn't give us a lot of confidence in Bitcoin. Then, in my classes, many times I taught, I say, listen, when you look at the data, maybe, because it's going up like this is, this could be big variations, but because there is a general direction and it seems to go relatively fast, maybe it could be an exponential. And one of the things you do to look for exponential relationship is if you have anything where you have some kind of doubling time, right? There is a very precise time where, like imagine, for example, you have a bank account that gives you 5% a year, that will be a relatively good bank account on investment, right? 5% a year. And you compound this interest, right? Over time, you will get an exponential, or, a virus that is doubling itself every hour or something, right? That process eventually becomes exponential. It looks like a J, but kind of Bitcoin, if you forget about this jump up and down, seems to have, right? You have to like squint a little bit to see that pattern, but maybe you can think that there is. And so this is one of the first things that we do in analyzing data. We plot the log. And what is the log? The log, it's a relatively simple idea. Basically, it's a function that gives you back the number of zeros, right? So if you have, for example, 10, and you apply the log to this number, imagine like you have a little box, right? You put 10 inside, and it spits out the number of zeros, right? And so in this case, if I have 10, I get 1. So this is where 10 is. If I have 100, it gives you 2. If I have 1,000, it gives you 3. 10,000, 4, and so on, right? 1,000,000 is 6. You get 6 zero back. And if you see negative numbers here, these are fractions because one of the 10, it can be written as 10 to the minus 1. So in this case, we indicate how many zeros after the dot, right? So in that case, 0.1 it will be 1/10, right? Well, minus 1, right? So basically, how many decimal
you have after
right?
the dot, yeah.
Yeah, the dot. So 0.1 will be 1 decimal point. 0 point, right? Minus 2 will be 0.01, so 2 decimal numbers, right? 2 decimal point, and so on, right? This is how you write with fractions. So
And
numbers
because
that are
Bitcoin on the
below.
beginning, the price was 0.00 something cents.
Exactly. So
Yes.
it went all the way. The first transaction that was ever recorded was from US dollar and Bitcoin was $1 for 5,000 Bitcoin. Can you imagine? So,
Yeah.
you should help with your physics skills, because together we should build a time machine, and we should go back in time and buy a bunch of coins very
Let's hope we're gonna
fast.
find a wormhole and jump in.
Exactly. So, and this data here, by the way, unfortunately we didn't have very good data besides few transactions like these.
Yes, of course.
Historical one like the pizza, and this early one, the first transaction ever. We don't have a lot of good data for the first year, and so
yeah, because Bitcoin on
around
the beginning was not many exchanges. Also, many exchanges were crashing. There were dodgy. There were many things, and it makes sense when you have something which is just started. It's supposed to be a bit messy on the beginning.
Right. And so we start to plot this data from when the first exchange is open, like Mt. Gox, and then we move forward. But, in theory, we're actually using the origin, right? Because we always count the time relatively to the January 3, 2009. So in theory, this graph extends all the way to when Bitcoin was graphed, right? If you go to the left of the graph. But you can see immediately, so forget about the rainbow that I will explain in a moment, that there is so much more organization now, right? I don't see a straight line. We like straight line when we do this exercise of looking for a pattern, because the human eyes can recognize straight line easily. And so usually if we see some linearization of the data, it's a sign that, that particular model that we have in our head, like for example, right now I'm looking for an exponential. If this particular chart, if we add an exponential, it will show as a straight line, like here. So you see this exponential that I draw here is not, I didn't draw that line by hand. I actually had the computer to draw it. I create some kind of artificial price. Of course, this price is very artificial because there is no noise, there is nothing, right? But I could even add some noise to it, make it a little bit more realistic. It will still look like a fuzzy straight line, right? If it was some noise.
So basically, the meaning of this graph, is to show that if the trend of the price action of Bitcoin was exponential, when you lock this information, you should get a straight line.
Correct.
Yeah.
So, and it is not, right? So I see much more organization, right? It looks like the price now, first of all, in the first graph, I could not even see what was happening in the beginning because the price was so small in comparison with everything else. But this type of graph couldn't even let me see. I will have to go there and zoom in, etc. But I cannot see at one glance everything is happening, right? So one of the advantages of this type of graph is basically allows you to see everything. And the reason why that happens is because, see, now we are focusing on the changes in scale. So these scales are these numbers, right? So here is another way of writing the number in such a way that basically you are emphasizing the scale, right? Many people sometimes complain about this, what is called scientific notation, because I heard that some of the people, because you see, this is what we are doing, Theo, me and you, right? We're trying to communicate science to people, right? We're trying to be science communicators besides being Bitcoin analysts. And sometimes we're going against things like this, where people, maybe because they don't have enough education from school or whatever, or they forgot, they have some resistances. And some of the people say, hey, why don't you use real numbers? These are real numbers. These are absolutely real numbers. Just a way of emphasizing the importance of scales. You see, we write them in this way because if you are dealing with numbers, they cover many different scales. you are emphasizing how many zeros the numbers have, right? So in this case, 1 is expressed as 10 to the 10, 10 to the 0. Here is 100, 10 to the 2, 10 to the 4, 10 to the 6, and 10 to the 8.
Usually,
right?
what I tell
It's
to
a
my
way,
viewers is that this
yes,
notation is like a microscope. It's like you go to a biologist and you want him to check your blood, and he put it under the microscope to see it better. Everything is there, but it needs a tool to see the movement of the of your
yeah.
blood better.
It's a good analogy. I
Yeah,
will say sometimes I use the analogy of a drone because really, in this case,
yeah,
instead
with
of
the
zooming
forest.
in a
Yeah,
sense, we are zooming out. We are trying to see the whole. It's like you're taking a satellite and you're taking a picture from the satellite, and you want to see the entire structure of a forest, of a continent, or whatever you're studying, right? So we're studying these from what is called scale. So scale is when you're changing the size of what you're studying by an order of magnitude or a multiplier of 10. So you go from 10, 100, 1,000, 10,000, and
a
so on. When you
magnifier
do it,
glass of power of 10.
yeah. So in this case, you're kind of giving the same proportion to all the different changes that Bitcoin went through. This is why you can actually see what you will not be able to see. It's not that we are doing, this is a very important thing to say to the people that are not so familiar with this. We are not doing anything to the data. We are not dividing for something. We are not multiply for something. We're not doing absolutely anything to the data. We are just looking it in a different way. That is very important because when people talk about models, many times they are in mind some kind of process, like you're saying, well, I'm taking
You manipulated the data, yeah.
You manipulate the data. You take, let's say I have a model of how, I don't know, liquidity in the US dollar affects the price of Bitcoin. When they say take the liquidity, take the square of the liquidity, divided by, I don't know how many cars are produced in the United States, and then multiply by the number of washing machines sold, right? So that it's a crazy model, but that will be a model, right? Where you take different things that maybe they don't seem related with each other, and then you manipulate it, you take some products and divide it, multiply, and then you get that thing, right? And then you see if it is related with what you're studying. In this case, we are not doing that, right? So people call it a model, but it's not really even a model. You are just looking at the data
with a different lens,
way.
basically. Yeah.
Yeah. And we don't do anything with the data. But we start to see that a pattern emerges, right? Because there is so much more organization. The data looks much more orderly. These peaks don't look so crazy like they were looking before. It allows us to see that maybe behind this craziness of the data, this big, huge variation, there is some kind of organization. It is not an exponential, like our first hypothesis, because if Bitcoin was an exponential, it will look like a straight line, and it doesn't, right? So we don't stop here. We don't say, like, this is what happened with, let's say, 99.99% of a researcher, because
yeah,
sometimes
including
people
me. The
say
first time I stopped there.
when they say, oh, you discovered this power law, what is the big deal? Well, the big deal is that people look at Bitcoin's data since the beginning, me included. I did find other power law. We can discuss them in a second, but I didn't find this particular power law that I'm going to show you in a moment, because it's kind of spoiling the story, but people know the story, right? I discovered even more order behind the price of Bitcoin. But in fact, we can show it, and then we can discuss it, right? And so the next thing you do, and like I say, it took several years because people were looking at the data from the beginning. When Bitcoin came out, people started to analyze it, in fact, many people were claiming, I remember because I joined the Bitcoin world in 2012, and from the beginning, people were talking about exponential. One of the first articles that actually orange pilled me had a little chart. It was in 2012, right? We had few years of data, and they were already claiming Bitcoin was an exponential. And maybe in the beginning, even imagine you're here because this was 2012 will look like, right? If you just look at maybe this region here.
Yeah. Maybe you think there is a line there. Yeah.
Yeah, maybe you think there is a line, but as we got more data, it was evident it was not. And nobody thought it was a power law, right? So the next thing you do is this trick that in physics we use all the time. So by the way, for the people that are not used to it, it's something that they teach us in class, right? It's actually just posted a lecture from Stanford in my X, and actually maybe you can even use it as a link.
Of course, I will put in the link in the description
it's a very
below.
good introduction
To the power laws here.
And they talk about power laws, in that lecture. It's an entire lecture on power laws. And it's one of the topics that, as a physicist, they teach us, because it's actually, it turns out that many physical laws and many physical phenomena are described by power laws. And in a moment, we will tell what a power law is. But basically, the first thing in this journey that I told you, right, you start with a linear graph, you're looking for a pattern. Usually you want to see a straight line. Of course, in the end, if you don't find a straight line, you still try to do something else. But a straight line is nice because we have all these statistical tools that can fit a straight line. You can see it with your own eyes because, you don't only rely on your eyes, but your eyes are where you start. It's kind of a sanity check, right? If I see that data is linearized, it looks pretty much regular in its pattern, etc., maybe there is something there. And then this is where you bring the big guns, right? You start to do all the statistical analysis, you start to do all the verifications, all the tests, etc. But if I see the data and I look like a big blob, probably there is nothing there anyway. There is nothing to do. I mean, and some people sometimes do that. They look some very fuzzy, kind of blobby data, and they still try to do a regression analysis. And maybe in some sciences like sociology, etc., I saw some paper where if a physicist look at the data, they say there is nothing there.
I think they're excused there because they use small sample sizes usually. They try to do this kind of analysis, but just to help our viewers and listeners understand the importance of this model now. Imagine that you are a physicist, you take the data from a linear format, you do the log of y scale and the log of x-axis, and when you come up to the result that now Giovanni showed us, you lock in. When you are a physicist and you are starting to see something interested, is the time now you become serious with the model. And now you're starting to dig a bit more and more and more and check the validity of this model. And I know, spoiler alert, many of you know that Giovanni and me included, I check every statistical test that I could do on this model, and it's absolutely magnificent. But anyway, let's leave Giovanni follow the story.
I want to re-emphasize that because even the other day I was talking with somebody that same, he worked for Google. He's an intelligent person. He's not a physicist or not a mathematician, but a clever person in his field. But because he doesn't know about these things that for us, for me and you, Theo, is our job, right? We do these since we were young, because we are passionate about physics. We studied in high school, we studied in college, when we studied in graduate school. For us, looking at data, it's like, I don't know, many people driving a car, they did it so many times, it's a second nature to them. For us, looking at data is second nature, and we understand immediately.
And we need to understand the data as well. This is the difference, because many analysts, when I see them, they rely on some pre-ready models that they found online or AI models, and they just run it without understanding, and they come up to results, which when I tell them, okay, let's say that I'm assuming that what you are saying is correct, explain me in detail in 3 minutes exactly what this model, for example, Prophet or whatever model does, and they immediately stop there and they say, go and check the manual. But no, this is not a real answer. That means that you don't have a clue. And because many guys are using this in some fields, you say that, okay, I trust it. But one of the motto of physics and also Bitcoin is that you don't trust, you verify.
Right. And so, it's sometimes it's difficult for us to understand when people have some
difficulties, difficulties,
or
because
maybe difficulties in understanding. So this guy, for example, was telling me it looked like you were forcing a linear relationship in this data by stretching it or something. They use some terminology like that. We are not stretching anything. We are just showing.
And actually, you didn't do anything yet. Actually, you just did the log. So you
ultimate. We call them transformations.
Exactly.
Like, the transformation of a transformer, of a robot, it's actually even worse because when the transformer goes from a car to a bot, it's a real transformation. Here we just show the data in a different way. We are emphasizing these different things. In this case, we're emphasizing the scale.
To that guy that said that, it's like it's the same when you see, even if you Google now on YouTube and you see someone looking under the microscope and you see the movement of germs. It's like you're telling him that because he's watching the germs, it affects their movement. It's not.
Right.
It's just using a lens to see them better. And basically what we did until now, and what you did basically, was you allow us and you gave us the idea to look the data with a better lens and then start to do the regression analysis, then start to do the statistical analysis, then start to do the residual analysis, and then understand more the reason behind it, which Giovanni will say why on his theory believes that Bitcoin follows the power law, because that is reason. That's different with physicists. We didn't stop there. Someone will say, okay, the line is fitting very well, job done. No, it's not job done for a physicist. He wants to understand. You now want to know why it's following this and what is different and what it. And if I replicate this, it will work. And if it does not work, why it will not work? It's a million questions that are going to come from a physicist.
Exactly. So this is this is the ultimate tool that physicists has when we look for data. And so what did I do differently from before? I took, instead of taking only the log of a price, I took also the log of a time. And by the way, I had to talk with some economists that told me, you cannot take the log of a time. What do you mean I cannot? Because they are so untrained, they don't think in this way. According to him, you cannot take the log of time. It doesn't make sense. And I actually had a PhD in economics. They even say that is like one of the most ridiculous things that one can say. It looks to me, they don't even, like you said, they don't think about the data. They don't understand.
They are not trained to do that. We have
just plotting.
I tell them many times that physicists, we have a complex because every time we had to explain ourselves because no one was believing whatever you are saying if you could not prove it. We have a leftover complex with that we need to explain everything. But anyway,
So of course you can take anything. You can take data and then you can do anything with the data. You can take the square, you can take the square root, you can multiply. But here we're taking the log, and the log really doesn't do anything special besides pulling out how many zeros there are in that number. So for example, here you see 3, that means 1,000 days from the Genesis block, right? We are pulling out how many zeros. So if you see a number between 3 and 4, it means it's something that is between 1,000 and 10,000, right? You can always calculate the log. I say it gives you a number of 0, but if it is 3.4, it means it's a number in between, right?
Mm-hmm.
There is a formal definition. It was just a way simplifying what the log does.
Actually, I did that. I will put a video in the description below. When I explained the power law, actually, I took a pen and paper and I did the logs of the first 10 days with people, the log of days and the log of price, so they will understand how they can replicate it. Because in the end, we want everyone to test it.
And nowadays, it's okay to use ChatGPT and all kind of things, but you always have to do it in a way where you understand the result, right? Don't never ask ChatGPT to tell you something or do something without analyzing and trying to understand and absorb the meaning. But you see, once you do this, when you see this regularity that you were not able to see before, you see finally something that looks like a straight line. What do I mean that looks like a straight line? It means that it's regular, that the price seems to grow in a very organized, orderly fashion. Yes, there are these oscillations, but they seem to happen around some kind of general trend that is basically a straight line. Now,
which people can think like is like the fair value of Bitcoin, let's say. This line, it's like where is the trend that we believe Bitcoin will follow. And we have the time where the price goes above this line and times where it goes below it.
Yeah. And by the way, I didn't draw this line by hand.
No.
Even if in a theory you could do it, you could put a ruler there and draw a straight line, because like I said before, our eyes actually is pretty good in picking up a line. I had a professor that he will print. It was, one of my mentors, my actually PhD mentor. I learned a lot of things from him. He was funny, this short guy, but he knew so many things. It was like really somebody that I could learn a lot. The kind of old generation when probably he grew up actually using these slider rulers, that did like mini computers. I don't even know how to use them today. But he will print a graph like this, and then because we found a lot of power laws in our data, and we look for this linearity, and he will print it, and then you look it. Imagine you print it, and then you look it like kind of like this, like at an angle, right? You will take the piece of paper, look it at an angle, and you will see if it was a real straight line through the data. How regular the data was. Because, and I do that many times myself. I put the paper and say, oh, look, it does look like a straight line. But you can really see it. Here you don't have to do it because some of the data we had was a little bit more fuzzy or whatever. Here it's almost evident, and so this line is actually calculated by the computer. It's called a regression line, and basically what the computer algorithm is trying to do is looking for a line that minimizes the distance of all the pointed around, right? So imagine I have many candidates. I have many different possible lines. And the computer goes through all of them and then says, okay, I'm going to select the one where if I measure the distance of every single point from that line, it's the shortest total distance. And so it's a formal way of basically indicating what is called the best fitting line. It's a line that basically passes this test of minimizing the distance. So it represents almost like a kind of an average of the behavior of all these points. So will you agree, by the way, being a physicist, I know already the answer, it's a rhetorical question, but if you study anything else, imagine you study some natural phenomena, whatever, and you find a regularity like this, you will be super excited because already you found something interesting. You could even publish a paper, right? You could publish a paper based on this regularity. Do you agree that just by what we call inspection, we say data inspection, you're inspecting the data and it looks immediately there is a pattern there. There is already regularity. It's not something that is stretched or forced or something like some of the people say. It's real. There is some, immediately a physicist will say, there is something here, it cannot be by chance, in particular, because notice this, we are covering many orders of magnitude.
Exactly. So this is what I was going to say. You have almost 15 years of data on Bitcoin. And the importance for people to understand the importance of this red line is that it gives you an equation which you can project in the future. Not only that it describes what's happening to Bitcoin now, because someone will say, okay, fair enough, you found a line which it best describes the price performance of Bitcoin. But why this line is important, and for short, and there are many other reasons which Giovanni will discuss in a bit, but thinking that you can extend this red line in the future and you can make plans based on this line. You can adjust your portfolio, you can adjust your savings or whatever you think that is best for you But this is the power of this line. You can use it to see what's going to happen in the future. So
exactly. And so, and if you were studying anything else, natural phenomena, etc., you immediately will jump out of a chair and say, okay, I'm going to be famous because I discovered something interesting about this phenomena. I'm going to write a paper, and that and I can go ahead, advance my career by this discovery. Now, if you're thinking that this is Bitcoin, that is one of the most important assets in the world and probably one of the most important invention of humanity, and you found a pattern that nobody else found, because I discovered this in 2018, and when is one of the things me and Theo were discussing that off camera, like some people say, oh, you just found a straight line, congratulations. Why you didn't find it? Why millions of other people will look at the data before?
I tell that to the people.
Millions of people look at the data, including people from banks, people from financial institutions, and nobody found it.
Exactly.
Nobody found this pattern, and now we found it. It's something, it's not about me. It's the fact that there is this beautiful regularity about Bitcoin that it's important. It's very interesting. It's fundamental, something fundamental about its behavior. And it's not trivial, because otherwise it will have been found before. I think it's mostly because people didn't study like if it was a natural phenomenon. They didn't come up with the idea of doing what we will do with some physical phenomena, that will be to go to this stage where you do the log, because it's very unusual for a financial asset to be a power law. In fact, we don't find any other example. We don't have any other example.
We don't. And we also discussed that off the camera. Remember the other time, which I said that personally I believe the difference of Bitcoin compared to other assets is that it cannot be manipulated. And what I mean by that, I don't mean the short-term price. I mean as an entity, because we know that with the mining adjustment difficulty and with all the principles and the properties of Bitcoin, which you can find in the white paper, that properties stayed the same from the beginning of time, from the January that we said that the Big Bang of Bitcoin started, from that day, from 2009 until today. And usually on stocks and other assets, which are risky assets, are considered in this category, which you have higher rewards but also higher risk. You can have people to play around with the properties of the data when you play. For example, on stocks we have stock splits. One day, one company decided to make adjustments. So that is a perturbation, let's say, on our data, which we don't like usually as a physicist. And that is one of the most beautiful things for Bitcoin, which has not changed. And simplicity, usually in nature, is the best.
Right. Yeah. And so there is so much more. In fact, one could write a book, and I'm even writing a book about all this, because there is so much. Once you start with this approach, like Theo say, then a physicist will not stop here, will say, okay, this is my beginning, this is my start, right? Now that, first of all, you will do all these calculations, you will not just trust your eyes, you will do all the sophisticated calculation. One of the sophisticated calculation we do is this number that is called the R square, that basically tell us this straight line that I describe, that is calculated by this process of minimizing the distance of a point, tell us how good of a job that straight line does in representing the data. And it's a number that goes from 0 to 1, and closer to 1 it is, better the job, right? And you can see in the title, I calculated is 0.95. So that means, but you have to be careful about the interpretation. But one of the, let's say, simple interpretation is that simple straight line, it's 95% of a story. It's basically telling you with a 95% precision what Bitcoin is doing, is going along this straight line. And I know many people will resist that, because say, wait a second, it goes up, it goes down, it doesn't really, okay, maybe in general it looks like it's going up, kind of like a straight line, but it's not exactly a straight line. Well, your eyes are deceived because the calculation say 95, and the reason why it says 95 is that in average, even when you are going up and then you're going down, because the data is above and below the straight line. In fact, it turns out that it's about 2 years above and 2 years below. So they kind of cancel each other, right? So from a statistical point of view, the calculation is right and your eyes is no match, right? Because we say the eye can be used to, etc. But in certain things like calculating complicated statistical number, we are
Can
not
be
so good,
deceiving,
right?
yes.
But you also see a little bit with your eyes that it spends about 50% of the time above and 50% below. So from a statistical point of view, it's almost like these oscillations didn't exist. They cancel each other. And this is why, maybe not completely, because there is still a 5% that the straight line cannot explain, but 95%, if you can explain something with 95% precision, it's pretty good.
I'm
And
really happy, yeah.
and believe me, I worked also I went from physics, where we are used to this level of precision, sometimes even more. But when you go to fields like, for example, I went to neuroscience at a certain point. I spent many years working in the field of neuroscience. And by the way, I was doing the same thing, bringing the tools of physics to this biological field. And I was getting, I got a patent, I got a lot of results, because things that the medical doctors that I was working with, the neurologists, the neuroscientists, that they have more like a biological type of preparation and education. They didn't have the tools. I had the tools, and I was able to do much progress in certain areas where they didn't do progress. For me, it was almost like the same thing. Why nobody ever look at a log graph of the price of Bitcoin? Something that a physicist will be natural. Why they didn't do this? Why they didn't do this distribution? So they didn't do a lot of things, and I will do discovery and publish papers. Within few years of entering the field, I got a lot of nice results. Same thing here. We are bringing these tools of physics to something where usually people don't use physics to understand. And then you get all these very nice results. So this is one of the things you do. But then, as Theo was saying, and you can do many other things, like, for example, he was describing, you can do the residual. The residual means you're going to look at the difference, right? Say, okay, describe 95%, but what about what is left over? Let me take the difference between the price and the trend. Let me plot it. It's going to become like an oscillator. Actually, it can be used for trading, because when we see where the bubbles are relatively to the trend, where the bottoms are. So really cool information. But then you can study that, and you say how regular that is. What are the properties of that? And you never stop, right? One of the next steps that is the dream of every physicist, remember what I said before, you would like to find so much regularity in your data that you can actually write an equation. And it sounds crazy, right, for the average person, that you can actually write one single equation that describes the overall trend of Bitcoin. Because you will think, most people say, you cannot write an equation. It's so complicated. It goes up, it down, it moves sideways. What do you mean that you can write an equation? Yeah, I can do that, because that straight line can be written as a straight line, right? You can write the log of price equal. Every straight line has two numbers. One number is the slope, right? The slope of a straight line. And then a constant, plus a constant, and that constant is the y-intercept. So I can write log of a price equals some constant. That constant, by the way, it's 5.72. That is the slope of that straight line. Multiply the log of days, how many days are passed by. So that will be the equation, right? Log of price equal some constant, multiplied by the log of days, plus another constant that represents the y-intercept. The y-intercept, by the way, means when Bitcoin was created, what was the price, right? Because that will be the price at 0 time when Bitcoin was created. And so you can write that equation. Now you can go from the logs, and it's a relatively simple high school math to go from that expression that just say log of price equal, a constant times the log of days to something that is more like price equal time, right? And when you do it in that way, just using the simple log rules that you learn in high school, you can rewrite that equation as the price equals some constant, A. That constant A, it's a very, very small number because remember it represents not at zero, because at zero, the price of Bitcoin was zero, but day one. So the price at day one was very, very small. So 10 to the minus 17, that means, that is 10 millions of a billion to something like that, right? So,
It makes sense. It was
right?
zero. Yeah, it was zero. Yeah.
Was zero. So basically very, very, very small number. For a physicist, we will round it up and say that is zero, It's a very, very small. Like a number with 16 zeros, 0.16 zeros, 1. Basically it's zero.
Which makes sense because on the beginning of Bitcoin, no one knew its actual value, and it was started with a value of zero and then started to grow.
Yeah. And so you take that the price right here, do this equation equal that small number times the difference in time between what this T minus T1. T1 will be the day of creation of Bitcoin. T will be minus 1 will mean the difference in time. So how many days are passed by the creation of Bitcoin to some alpha, some number, and we just say that number corresponds to the slope. So you measure the slope of this straight line. That slope is 5.72, and it becomes this little number, the exponent. It's called an exponent or a power. This is why I didn't invent this word, because that is the other thing. Is I said Giovanni is so arrogant. They called this law. He called it a law, and called it the power, right? So he's so crazy guy. No, it's a technical term. We call them power laws. I just told you there is this lecture that I would like you guys to watch if you have a chance, because Theo will put it as a link, where they discuss power laws. I didn't invent them. It's a technical term that describe this type of relationship. They are called power laws because there is a power. You see, there is a power. That is called a power, that little number over there. And so if you have a relationship, so this is a very general type of relationship. We find them in nature everywhere. And by the way, before I move to the next slide, I highlighted here in blue the time when I discovered it, that it was in 2018, because many people just heard about the power law recently, but that is simply because I got a lot of attention because it was a famous, I started with this year, like at the beginning of the year, when I made another post, basically 6 years ago, I made a post. Imagine I made a post where was on Reddit, where all the data beyond the blue line were not there. So imagine I arrived here, then I posted that and say, oh, guys, Bitcoin looks like a power law. And this was 6 years ago. 6 years later, I posted in an update. So I was very patient. I waited for 6 years. I didn't even brag a year later or 2 years later. 6 years later, I posted an update, and it was all this new data. And you see, even if there are oscillation, even if it's going up and down, the general trend is exactly what I say was going to be for 6 years. That is also unheard of, because almost nobody.
That's amazing. For people that they didn't understand what just Giovanni said, he said that imagine that he didn't have the data from the blue line, and afterwards he published this equation, and he came 6 years later, and the exact slope, the exact rate of change in the price of Bitcoin on the fair value, let's say, as we said before, was exactly the same. So that is evidence that this equation works.
Because many people say, let's see if it works, the future. No,
because they say the usual word, the overfitting, and all these standard BS.
We already shown it works for the last 6 years. Now, the only reason you heard about the power law recently is because I was trying to explain. I posted again, and then I read it, and they say, guys, I told you 6 years ago that this was going to be the pattern. Look at it up, right? It did follow the pattern for 6 years. And people went crazy. This time, the first post, people were making fun of me. They were not, some people thought it was cool, other people didn't. But among the people that read the article, so this was an article, it was on Reddit. I should have wrote a serious article about it, but I posted on Reddit because I wanted to reach the community. I wanted to let as many people possible about this beautiful discovery. And there was his name is Andrei Jik. He's a relatively famous finance YouTuber. He has like 2 million people following him. And he contacted me and he told me, Giovanni, I would like to have an interview with you. I am this YouTuber. I didn't know who this guy was. And then we made this 1 hour interview. He made a beautiful video with, in fact, actually look it up because
yes, I saw it. I saw it.
Done.
Yeah, I saw it.
It has a nice animation. Sensata, it talks about the Kepler's law, all these things.
Mm-hmm.
And that video got almost 400,000 views, and so this is how I was able to reach a bigger audience and started to be relatively well known myself. I got a lot of people on my X, etc. So this is why you heard it now, but I have been working on this. But by the way, I found some of the other power laws that I will tell you about since 2013. I defined this one in 2018, but the other ones, we go all the way to 2013. But, some people knew about me, but not enough where you heard about the power law if you were in Bitcoin. I think almost everybody that is in Bitcoin at least heard this term by now, So, and it's good because, this information is spreading and more people know about it. But this is
Do you sometimes
right.
Yes, sorry.
Yeah.
Sorry, continue. Do you sometimes fear that, because as I said to the people, this equation is really powerful. Do you fear that when more and more people are going to find out about this, the power law is going to deviate Bitcoin from its price because more and more people are going to use it? And I'm here using some pass to the Scale-invariant that we talked many times before. But yeah, tell me if you think that it will affect it or not, or Bitcoin does not care.
Of course, two things. Well, first of all, look, I'm interested in understanding Bitcoin, so that is the ultimate thing. Of course, like all human beings, I have my own desires, I have my own wishes, and of course, I will be a liar if I didn't tell you that I'm a little bit associated with this discovery, but one thing is clear, that even if Bitcoin did something else, the last 15 years of history, Bitcoin has been a power law. So in a sense, I already written my name in history because I'm describing what Bitcoin has been done for 15 years. Because if you want to understand,
right,
one day Bitcoin will be studied in schools. They will teach it.
Because actually, this deviate because of that is another finding. Because exactly. So yeah,
because we describe it, Bitcoin has been doing this for 15 years, and there is no debate because professional people like Theo, they look at this, and believe me, one of the first things as professionals, that is one other thing that people don't understand. We want to not destroy, but we want double check, triple check, 4 times check other people work. If somebody like me comes up and say, look, I found this pattern, it's so nice, so predictable, Theo will be the first one to say, Giovanni, your model doesn't work. You did a mistake. There is something wrong. Because this is what we do all the time in science. We push each other. And this is one of the things I don't understand also in terms of how people see science, how I understand it. Because if I talk bad about another model for good reasons, because I think the science is wrong, the data is wrong, the approach is wrong, I'm actually doing what scientists do all the time. And in fact, what I expect other scientists to do with the power law. But many people say, why don't you focus on your model? Almost like if it was some kind of the DEI principle, right? That every model has a chance, every model should be treated with respect. No, there is not such a thing in science. We want the truth. We want to destroy other models, not because we are from other people. You want to destroy your own model first. Believe me, before I even posted anything, I triple, fourth time, fifth time. I checked everything. I tried to find problems with the model. So I am the strongest critics of these. And then, many professionals look at these, not just Theo, but, Fred Krueger, many other people did it with the knowledge, the background, the experience, because they do this all the time with data. For us, is our job. This is what we do every single day. They will have found a problem. And so far, not one single professional that knows and understands the data came out and say, look, Giovanni, this is not valid because of this reason or this other reason. Nobody has done this because the data is real. So at least for the last 15 years, Bitcoin has been a power law. It needs to be understood. It needs to be studied. So independently of any practical application, if you want to understand Bitcoin as a science, and like I'm telling you, even right now, there are people publishing papers on Bitcoin, like scientific paper. One day, it will be in textbooks. It will be in like teaching in classrooms. People will be taught about Bitcoin, and part of his history, 15 years of history, is that it was a power law. So I'm already done in a sense in
got the point.
Discovering and trying to understand Bitcoin. But of course, I would like to continue to be a power law, mostly because I think the property of power laws are very beautiful, and it's almost perfect for Bitcoin to be like that. But in the end, I want to understand Bitcoin. So if Bitcoin does something else, it's not that I'm going to get offended. Actually, like you just said, because now we have a framework to understand how Bitcoin is behaving. If there is a deviation from being a power law, then the power law helps us to identify that deviation. We can measure it relatively to what Bitcoin has done so far, and then say, look, it's changing. And so as physicists, you're actually interested. Many times, actually, we find it exciting when things don't do the same thing, because we like regularities, but also if there is something that is different, then we can go there and study what happened to Bitcoin, why it's doing something different, and so on and so on. So it will give us an opportunity to understand Bitcoin better as a system. But to answer your specific question, actually, the nature of this type of processes that are behind the power law could be that actually create some kind of self-reinforcing loop. Actually is going to make it even stronger instead of weaker. So if people started to play with the power law, even trying to go against the power law will react and make it even stronger than before. And we have evidence of that because, for example, the bubbles are an attempt to go against the power law, right? So, and that happens on a regular basis, because we have these cycles where we have the bubbles. And I can show you another graph where how the bubbles interact with the power law is much more clearer, because as we said, we never stop, right? When we start to find some interesting pattern in what we study, as a physicist, you never stop. It's a never-ending story. So you go deeper and deeper and deeper. And one of the first things we discover is that if you take that general trend line that we described, and then you go down by about 60%, you found this very, very nice and significant support line. So you see how all this data seems to move along this red line, and that line is simply the line that we draw before in the center, but now it's shifted down about 60%. There are other more precise methods, like, for example, here, you see I call it robust fit. I base this fit on identifying inliers and outliers with a method that is called ransack.
Exactly.
And that
I did that as well also, yeah.
It allows to identify data points that are much closer to the trend and data points that are far away from the trend. And you can see the far away from the trend are basically the bubbles. And look what happens to the bubbles. The bubbles, and by the way, I don't know, I think I have it somewhere. I have that graph somewhere, but if you, sometime I actually draw the blue dots without the black dots. And again, it's one of these things when your eyes see that, you are almost like shocked, because these blue dots, you see this big, huge gap where Bitcoin does something else. And then You can kind of see it here, but it's more shocking if you don't plot the black dot. You plot them like with a gray color. They are basically there. Need to add that graph to see how striking it is. And then your eyes say, whoa, how is possible Bitcoin knows where to go, right? That it needs to go back to that place. And sometimes these periods where the price leaves the power law, it's almost 2 years. So it leaves the power law, it does something else, and then it says, I don't like it, I want to go back home, and it goes back home. It goes back to the general
It's like
trend.
it self-corrects.
So it self-corrects. It's almost like if a bubble didn't exist, because the total result, look at this, right? I could have gone all along the red line, like if the bubble was never there, and it will be exactly the same result. So the total result of a bubble is almost like they don't exist. That is really cool. Again, as a physicist, you look at something like that and immediately recognize there is a pattern there, that has to be true, has to be something real and physical. Now, we have some evidence because, like, if you, for example, use hash rate as one of the data available to you, and you use it to calculate the cost of Bitcoin, then you get something that is not perfect, but becomes very, very close to this red line. So we think that this red line is, in fact, the real power law that has to do with how much it costs to produce a Bitcoin. And so this is why when the price goes there, it doesn't fall much lower than that, because if it did, then the miners will be unprofitable, the entire system will not work. So somehow the system knows that cannot go lower than that. That is the hard bottom.
Yes, that's the uniqueness of Bitcoin. And many times you see when we enter, especially a bear market, you see that the cost price of miners is this, and if the price goes close to this value, that means they could exit the market because it's not sustainable. I'm sure many of you had this story and read these articles. And that is the power of the power law here model, which differs from the previous one. Imagine that it's like it's calculating the bottom for Bitcoin. So it's like you can use it and imagine immediately, because as we said before you can project it in the future. Imagine that you don't believe in BTC and you come 3 years later or something, and you see the price of Bitcoin close to that red line. Imagine what you have to do well. So you need to take some actions. When you see the price of BTC come close to the red line, it's like a Christmas present.
Yeah, you should go and sell all your shares at home, everything you don't use, and buy a bunch of Bitcoin.
Yes, of course.
So this information, besides being fascinating,
it's really powerful,
and interesting and beautiful, is also, because science is amazing and you can study it by itself. You don't have to have necessarily a practical application for science, but then science also leads to technology, right? That is actually practical applications of the science. And this is a powerful technology because once you identify these patterns and you know what Bitcoin is doing, that there is like a bottom level, there is a support that seems to be violated. By the way, for example, you see this little deep here. This actually was pretty big. It looks little here, but it was a big deep. That one is COVID. COVID. And even during COVID, the price reached this level and then bounced back. So, it was almost like a stress test for the theory that says, Bitcoin behaves in this particular way. There is this bottom. The bubbles don't count. This is why I call it a theory. By the way, many people confuse that are not familiar with science. Whenever I call it theory, they think that it's some kind of guess, because they say, oh, this is in theory does this. No, in science, theory means it's like a complete, organized understanding of some natural phenomena where you're trying to explain everything, every aspect of what happens to that phenomenon. So this approach went from being just some kind of exploratory model, I model quote unquote, because there was nothing to model, it was mostly like describing the data in a particular way, to a full theory. Now we have a full theory of Bitcoin because if you read my article, I wrote an
Yep.
entire article. Eventually, like I said, I will write even a book, but it's a way of understanding Bitcoin as a phenomena that does certain particular things. Like, for example, according to this phenomena, the bubble are there, they are deviation from the trend, where we will call them perturbations in physics. And then the perturbation dissipates, goes away, and the system wants to go back to equilibrium. It wants to go back to this general trend that it follows over many orders of magnitude and many years. So that is the understanding that we have right now. And there are many more things. Like, for example, Theo was hinting to, once you find this phenomena, okay, what generates this phenomena? What is behind? What are the causes? What are the different possible links, causative links that can create such a phenomena? We never stop. We always investigate. We always go deeper. And I will tell you in a moment what we think generate this process. But so a few things about this graph, right? So first of all, the red line tell us that there is this bottom that is very important, very fundamental. The bubble basically disappear because they cancel each other. Somehow, look at this, the price leaves and it tends to do something else. So I think if it does something else, it will want to go back to that trend anyway, right? So momentarily can be because maybe there is some big announcement like the ETF. The ETF pushed the price away, and notice what happened recently. In fact, I can show you some recent data where the ETF pushed the price to the trend, to the general trend, and once it reached there, it actually started to go down.
It acted as a resistance, yeah.
It was almost like a resistance, and then the price started to correct itself. And it happened also here, for example. You see how we left, and I can show you some graph where that is evidence. We left the power law. Maybe I don't know what that event was. We can look it up. Maybe something that pushed the price and made
basically the main idea. You have short-term events that they can deviate the price of Bitcoin from its power law, but in the end, it comes close to it. And that is why many times I've, let's say, struggle with a lot of people in X when they say that, okay, governments will come and adopt Bitcoin or whatsoever, and Bitcoin can go higher and higher and higher than the expected value, which we are going to say in a bit what the Giovanni expected price is, which aligns perfectly with mine. But what I tell them is I don't mind actually Bitcoin go to even an outrageous price, but in the end, I will know that it will eventually correct and come back to its power law line. So that's the important thing for us. It's not the deviation. It's the fact that it will come back to its fair value, let's say.
Yeah. So, and this is why, for example, you can do many tests. That is another thing that this graph is trying to show. I have it here. So, because I wanted to come up with other way to show that there are properties of Bitcoin that are consistent, right? So one of the most fundamental property, because it's another thing that people don't appreciate because they don't have a background, they don't have the knowledge about power laws, but again, in that video, they make a big deal about this property. I want to show that, it's not just me making a big deal of these things, that other people talk about power laws exactly in the same language, is this idea of scale invariance. What the scale invariance?
This is my next question. I have a lot of people from my community asking the importance of scale invariance. I know many times you said that if there is a power law, there is scale invariance. It's like it's if you don't have a power law,
it's one-on-one. In fact, another way of calling this phenomena, it's a scaling law. You could also use the word scaling.
Can you explain us a little bit more so people will understand it?
So remember, let's dive in because it's probably the most important property of a power law. And in fact, I will say that beside, what are the most important property of Bitcoin? People will mention the finite cap, right? The 21 million coin. That is very important property. And by the way, eventually I want to integrate it in the theory because it looks to me almost like a conservation of money property. And in physics, we have all this conservation of energy, conservation of momentum that are very, very fundamental. You can actually almost start from these conservation laws and then build physics from these conservation laws. They are that fundamental in physics. You can almost explain everything else starting from this conservation law. You can say, given that there is conservation of energy, given that there is conservation of momentum, then we should observe this and this other. So you can almost rebuild physics just from the conservation laws. So it will be very interesting to do that with Bitcoin, starting with conservation of money. But so far, whenever I tried, I got a little bit stuck. I don't know how to do that yet. But in this case, I will say the second most important property of Bitcoin, it's that is a scale-invariant system, because showing that is a power law, and it has been a power law for 15 years, and has been a power law over all this order of magnitude. To give you a sense of the order of magnitude, I always do this analogy. So imagine that Mount Everest is about 10,000 meters, right? If we want to round it up to the closest zero, because whenever you consider order of magnitude, always you want to use numbers that are close to 10, right? So you always round it up to the closest number. So Mount Everest is 8,000 something, right? So let's round it up to 10,000. So to cover the same order of magnitude that we cover here, that is in this graph is more like 6 order of magnitude, because we start from the time when the exchanges were open. But if we went all the way to the first transaction where Bitcoin was created, we will go to, in that case, we will have 10 to the minus 4. And so we will talk about a range that goes from 10 to the 4 to 10 to the minus 4. So 8 order of magnitude. And that is, so if you add, imagine you have like a little grain of sand or salt, whatever, that is 1/10 of a millimeter, that basically you will need a magnifying glass to look at. And it will be still very small, even with a magnifying glass. And now you saw this because I came from the sky. It was some kind of meteorite or something weird from the sky. And you studied all what is left is this little grain of salt, and you're trying to study the properties, and now you see that it's growing, and it's growing, and it's growing. And now you have to bring it outside because it's going to destroy the lab, because it's so big that the lab will explode, if you don't bring it outside. So you bring it outside on some kind of open field, and this thing grows all the way to be taller than the tallest mountain in the world. It will be 10,000 meter mountain. It will be taller than Mount Everest, a little bit, right? Because we say we round it up all the way to 10,000. So it will be the tallest mountain, starting from a little grain of salt. And it did it in 15 years. So that is the range of change that Bitcoin went through. Can you imagine? In a relatively small amount of time, because mountains take millions of years to grow, right? This one took 15 years. Sometimes it's difficult to understand how crazy Bitcoin growth was, and that's been. And this example gives you an idea, right? Something that usually takes millions of years to grow to this size, it took only 15 years. It will be something that it will be on everywhere in the world. They will talk about this strange phenomena, from outer space, that we are studying, and it grows in this crazy way. Now imagine that if a scientist also study that it does this, right? So there are times where it grows very fast and then it goes back, to its general trend, but there is a general trend. Imagine this is data about the size of this mountain or whatever, this strange meteorite from space that is growing in this way, and they discover this pattern. People will go crazy because we say, maybe there is something internally, maybe it's even alien, design is actually artificial. It's some artificial structure that the alien are making grow in this planet. Maybe at a certain point, aliens will come out of it or something, it's some weird object that is growing in this very precise, almost programmed fashion, because it's so precise and so regular, right? So that regularity that we see, that is basically a straight line, because a line, it's a very regular process. It's a proportional process. It means that the changes in the log of price are proportional to the changes in the log of time. And remember what the log represent. They represent scale. They emphasize the scale. So these changes in 10, 100, 1,000, 10,000. So we are focusing on the scale. And when you're focusing on the scale, you see this very precise pattern. And because it's a precise pattern and because the pattern is regular, it's called scale invariant. So the invariance means it doesn't change. So the changes in the scale are invariant. They are like a constant. In physics, we always look for this. We look for two things. That physics, in a sense, is the science of change. We want to understand change, how things change, how temperature changes, how motion changes, all the different changes that are happening in the universe. But sometimes to understand change, you need to understand also what doesn't change. So in physics, we always look for these things called invariant, that are quantity that stay the same, like the speed of light, right? The speed of light is an important invariant in physics because it doesn't change. It's something that it's all the different observers will always measure the speed of light being the speed of light. It's a very fundamental quantity in physics. And so here, the change in Bitcoin, in the change of how the price, the log of price and the log of time are related to each other, it's a constant. In fact, if you take, so there are many different ways of demonstrating that. Like, for example, in fact, it's kind of like definition of, it's also discussed.
I remember you show me a graph when you take the difference between different dates.
So, yeah, imagine, so this is basically one of the way of thinking about scale invariant. So imagine I'm on the straight line that is supposed to represent the general pattern of Bitcoin. Then I leave a straight line moving along the x-axis. In a sense, this is almost like you're zooming in. So imagine, in fact, I'm showing you next a graph where I take only one little section, almost like a little inset of this, like a zoom in that only goes here, right? So you can almost put a square or something. I could even do that. So imagine that I'm zooming in and I'm looking at only this area here, right? So only this area here. And so you're zooming in. Imagine now I make this area much bigger, and now you're seeing only this section, right? What I'm expecting is that whatever property the curve that I was describing had is going to be similar to the new place where I land, right? The new place where I land is this one. So I started here and I'm going to land there. Notice that if it was a perfect straight line, of course, the straight line has the same slope, has the same characteristic here than here. So when I zoom in, and I can do the same thing with zooming out, right? So zooming in or zooming out by any arbitrary amount is going to be the same. Now, you can argue and say, wait a second, but here Bitcoin was doing something different, right? Then was doing something here. Here was doing like this. It was going down. You had a different slope. But remember what we just say, that if you give this opportunity of interpretation of what the bubbles are, that are basically deviations that kind of cancel out, we can say, well, but the overall effect, right, it's this. And in fact, what you could do to demonstrate that, you could take a moving average of a price, and then if you did a moving average, you will see that these bubbles really cancel out, right? If you give enough, if you make a...
Yeah, I remember I see a graph of you, which was the 4-year, I think, moving average.
Moving average.
Yes, and it was like it was almost the same with the power law, yeah?
Yeah, but you can also say, wait, okay, let me still play the game where I'm going to do this thing. I'm going to take this shift here, compare it with this shift here, then doing it again. In this case, I'm zoom out. Imagine now I'm looking at a bigger graph, right? A bigger section. So I look at all these. I started here, I go here. So I zoom out. So I can do it with zooming in, zooming out. And then I compare this shift along the x-axis versus this shift, right? If this was a perfect power law, like the red line, it's a theoretical perfect power law. And in reality, we never have perfect power laws because the data in reality is never like, the one that you draw on a piece of paper, right? That is kind of an idealization that we use because it's simple, we can calculate, we can write equations, but real data is never like that. So we can do an experiment and compare how the real data looks like in comparison with the theory, right? And I will show you in a moment how this experiment goes. So if a theory was perfect, if the data was a perfect straight line, you agreed, these are triangles, right? They look like triangle. And from, almost elementary school, but, for sure, middle school, high school, you study that triangles are proportional, right? So the ratio between, see how I have a triangle here and I have a triangle there, right? Do you agree? These are similar triangles, right? Do you agree? They have a similar side, similar hypotenuse, similar, they are rectangle, right? So they should be proportional. So the ratio between y2 over y1 should be proportional to x2 over x1. You agree with that?
Yes,
right?
Of course.
Then I can take the log of both sides, and you notice that y is the price and x is the time, right? So I'm expecting this type of relationship, right? Because if you take the log of both sides, it's the equation is still true. You agree with that, right? So now what happens if I do this over and over and over again? I'm going to sample, and the computer is very good at that, right? It can take this time, right? Because this will be corresponding to a precise time. This point will have a precise time and a precise price, right? When I take this other one, it will have a precise price and a precise time. And then, I shift it and I go here, right? And I go to another time and another price. And I do this over and over and over again, right?
You can randomly pick 2 points, basically, and do this equation to see what's going to come out.
Right. And so, because I don't even want to average, I don't want to do anything. I just take it as it is. And this is what I get. In fact, you know what I did? I did it theoretically. So I did it actually with the straight line, with the perfect straight line. With the perfect straight line, if I didn't add any noise, it will be, this is what I will get. The result of that exercise where now you see I'm plotting the that log of P2 over P1. And P2 over P1, as a name, is called return. So if you take the price today over the price yesterday, that is called a return, right? So if it is above 1, it means that the price went up. If it is below 1, the price went down, right? 1.1 will mean the price went up by 10%. At 0.9, the price went down by 10%. So I take the log of the returns because that represent the P2 over P1. And then I plotted versus that log of the ratios, right? Remember, there was this proportionality beside basically the ratio of the price is this side of a triangle, and this side represents the ratio of the times, right? And this is what is plotted here. So if I did it with, you see how I draw a perfect power law? This is a power law because it looks, this is a semi log or log linear chart where see how the price of Bitcoin looks curved. This is a beautiful theoretical power law. In fact, exactly the same one that I'm using here, but you see it's curved, right? It's the usual curve that we see when we plot only the log versus the linear time, right? And this is what? It's an exponential because it looks straight. Remember what I told you, in this type of graph, it should look like a straight line, right? It should look like a straight line. An exponential should look like a straight line. Now, if I don't add any noise to this curve, and then I do this little game that I explain, I take any 2 points, I look at the change in price, I look at the change in time, and then I do this over and over again, I will get a perfect straight line like this in this graph. It will look like a perfect straight line. But to make it a little bit more similar to real data, I added some noise. I created some noise. I added the noise to the data. It's artificial noise. And then it looks like this. It looks like a fuzzy straight line. Instead of being a perfect straight line, it's going to look like a fuzzy straight line, right? So that is like a beautiful, perfect power law. with some noise, right? And when you do this, remember, this is the theory. I just took these nice theoretical curves, I added some noise, and this is what I get.
And
Now,
basically,
when I do
the
it-
red one is a power law, and the black one is an exponential.
an exponential. You see, the
Mhm.
exponential is very, very, very different behavior. It
Mhm.
starts to do this S curve,
Like yes,
almost
like an
it
S.
looks
Yeah, correct.
like an S on a butterfly or what you want to
Mhm.
call. And I could train a computer like this is how, for example, some of these machine learning, artificial intelligence, they look for patterns that are very different between, it could be people that have cancer and people that don't have cancer. This is a control group.
Yeah, they call it the
this
sigma function, and they do different
and
things. Yeah.
there is a group that is control, and you want to compare another group that has some conditions, and then you're taking the blood pressure versus the temperature of a person, just some random stuff, two quantities that are thinking, they are relevant to identify these people.
Yes.
People that have malaria or something, maybe you measure the temperature, measure the blood pressure, whatever,
Yes, and they use it to pick if, let's say, a patient has a certain condition or not, and it's like a threshold. When it goes above this, their threshold that they decide, that means, and this is the uniqueness now of the power law.
Yeah, you could train an AI and say, identify if what I'm dealing with, it's one thing or the other, and you can see they are really different behavior, and even the AI will be able to tell you, this is a power law. This is, you could give them a bunch of data, and it has to differentiate, right, between the two. This is how AI works, right? You train it over data, and then if you see a difference between the two, it will be able to distinguish one and the other. But even us, right, with our eyes, we can say, hey, this is a power law, this is an exponential. See, and this is the beauty of this is that I control it. I know exactly what my input was. One was a power law that I created artificially in the computer, and the other was another artificial exponential. So I know exactly which one is which. And
I'm going to stop you here to understand the thought process here of Giovanni. I'm going to say it in a line. Basically, the idea was that he wanted to check if his theory of subtracting the prices, the log of the prices and the log of time, what will give him if it's scale invariant or not. And on the right side that you see the theory part, which basically is just an artificial data that Giovanni used to see, because you want to know as a scientist what the actual data of Bitcoin or whatever other thing should look like if it was scale invariant. So you take a model that you know and you built it and it is scale invariant, and you say, okay, I should see a line, the red line, if it's scale invariant. And if it's an exponential one, I should see this S-curve. And if it's another one, if it's you can do different functions to test it. Yes, yes, you can do different ones, different whatever. And then he's gonna move to the real data to see.
And then I took the real data. So this is real data. Okay, I didn't cheat or anything. I just took the Bitcoin power law data, just the price exactly, and I obtain this, okay, that is really basically this one. It looks like 1-to-1, right? And then I took what? I took gold, that is the black data. You don't see it very well because it's actually behind the blue dots.
And the S&P 500.
And then the S&P 500. And notice how they are almost perfectly what the theory says it is. Look at this.
Yeah,
they look almost exactly the same, right? Of course, the real data is going to be a little bit more messy and not perfect, but
no, that's amazing.
It really
that's
looks
amazing.
Exactly the same, right? So this is actually, I can't publish a paper because I never saw a way of demonstrating scale invariance, in particular with assets like this. I think this is a novel way of doing it. Maybe I'm wrong, but I never saw.
It makes sense to my mind. Yeah.
It's beautiful graph because it shows you that you can really discriminate even when the data is messy, because you remember, I didn't average, I could do this with an average Bitcoin price. I didn't. These are exactly all the data points with the bubbles, everything. And it looks fuzzy, right? So basically it looks like it's noisy. But in general, you can agree that this is a beautiful power law. And by the way, if you draw a line through this data and you measure the slope, you get exactly the same slope that you get with the regression of a price itself. Exactly the same. And the beauty of this is that actually you don't even have a second parameter. You don't have a y-intercept. You have only one parameter. So you have a way of showing Bitcoin is a power law with only one parameter. So there is not overfitting, because when you have one parameter, there is nothing to overfit. And
that's nice.
And it's completely unlikely that you will get something so precise, so different from everything else. Look how Bitcoin is, and I could do it this. In fact, at a certain point, I can take every single stock. I can take every single stock and plot it. I can take NASDAQ. I can take anything you have in mind, and they will look all like this. Nobody will look like that. So Bitcoin will be the only one that behaves like that. See, and it behaves in such organized fashion. So this is another way where anybody that comes and say, "Oh, you just drew a straight line." No, I didn't. I did so much more. I went so much deeper. I did so many different things. You are not aware of all the work I did. It has network property. I use differential equations. I did it. At this point, I did it at least in 10 different ways to show you that it's actually a power law. It's a deep statistical property. It's not like some kind of stretch line or other BS that you think I did. It's really a profound, beautiful property of Bitcoin. And
so far,
this graph,
to understand
I had
this,
one single graph that I will want to associate with me will be this one. This is like really
because as you said, it's a way. Maybe it will be a way to people to check if an asset, which I don't know if any asset would be scale invariant, because as I said before, always we have people messing with different assets, but it's a way to check if something is scale invariant. And in short, basically what it's telling us, Bitcoin was grown from 0.0 something, and we are hoping, and based on the model, will go to 1 million and then 10 million as the years are passing. But the rate of the increase will be known, and any subset that you will get as we move and as the scale of Bitcoin increases will end up to be the same number, right?
Exactly. Right? So in fact, as we move along, I even did a little bit of a graph where I say, what if we went all the way to, because right now, this is showing the biggest possible ratio that we got so far in returns has been 1 million, right? Because these will be data points where basically you took the entire history of Bitcoin. You get these points by taking a ratio between the entire, like the price now, for example, versus the price in the beginning, right, when the exchange is open. Imagine we go up by a factor of 10, so Bitcoin will be close to 600,000, maybe 1 million. We're talking about going from here to there, right? We can even draw, like, why don't we do it? Just to give you a feeling, because I want also to make an important point. So I'm going to insert a line, and so I'm going to move it along here, right? So here, look, this we are talking about one. So to go when, and it will be symmetric because this line goes both sides, but I'm going to focus only on here, right? So I need to do it also here. It's basically, this is symmetric on both sides.
It's symmetric because for people, when there is a point where you take the longest triangle, let's say from the biggest value to the lowest one, so you have a biggest difference. And sometimes when you get the 2 points where you check the difference, are going to be closer to each other. So that's why it will be, because Giovanni here is randomly picking points, and that's why it will be symmetrical.
So as we go to 1 million, it will look like we will have more data. So these little dots will go all the way there. And then if we go all the way, let's say, to 10 million, the line will go there. So, and you see, when people say, because this will be only that, right? When they say, oh, we are early. We are not early. If we are this, if you start to see Bitcoin from a scale point of view, your entire picture of Bitcoin changes. And this is the real way of looking at Bitcoin, because everything else doesn't consider the most fundamental property of Bitcoin. But we are showing the way to distinguish Bitcoin from everything else.
Basically, it doesn't matter when you join, basically, if it's scale invariant, right? Because
no, actually matters. It
no,
matters because
I'm going to. I will explain what I mean. Yeah, but elaborate on that.
It matters because actually, unfortunately, the scale invariance also means that if you don't look at things from a scale point of view, because if you're right, if you're looking at a scale point of view, right? If you're saying the scale changes will always be the same. It doesn't matter at which point you start to look at the scale changes. They are invariant. But if you transform it in the language of humans that is linear, then it does matter.
Exactly,
why,
because
example,
this is what I was going to say.
Yeah, we had big, like a small change in scale. Like, for example,
yeah, can bring the value really high. Yeah, because when you have the log scale on X, when you go to from day 1 to day 2, you'll see that the price increase it's greater in the language of humans. Let's say, as you said.
Let me explain it in another way. So in the beginning, if we went from let's say you multiply by a factor of 2 your time, right? So you went from 100 days, you bought Bitcoin 100 days before, and then you waited 200 days, right? And then at day 200, you decided to sell, right? So that was a factor of 2. Well, the price went up by a certain amount, right? And so the change in price will be basically 2 to the power of 6. So let's simplify 65 times, right? Imagine the price of Bitcoin. Let's simplify. Imagine day 100 was $1, and and so then I waited 2 times longer, and since the birth of Bitcoin, and I went to day 200, right? So it was not much farther away, because 200 days total is going to be less than a year, right? So I went from 100 days, it is about 3 months, to 200 days, not even a year, right? And all of a sudden, the price now is 65. So I had to wait only a small amount of time for the price to go up 65. Now imagine I go from day 1000 to day 2000. It's also a factor of 2. But you see, now I'm waiting 3 years to get exactly the same type of change. It will still be 65 times. So wherever the price was, imagine at 1,000 was 1,000 days, 3 years later, because 1,000 days about 3 years after the Bitcoin birth, the price was maybe $100. So the price was $100, and I do 65, so that will be 6,500. It's a big change.
Yeah, it's a big change, and you can see that from the equation, because it's a power law, but with the log of time. And actually, if you put the numbers down,
so it's a big change. But look what happened. Instead of few days, 100 days, I had to wait only 100 days. Now I have to wait 1,000 days. You see? Now I have to wait 10 times longer, because yes, the price is also moving up in the same way in terms of the proportionality of the change, but now the time also goes longer and longer and longer, because what is important is compare the change in scale in the price relatively to the change in scale in time. So, but people don't care about scale. I mean, you should care.
Yeah, they want the actual numbers. Yeah.
Unfortunately, we live in linear time. Maybe one day, if we extend our life and we make our life thousands of years or something with medicine or whatever, maybe
will not matter.
Time,
yeah.
Because now we maybe look at the time in log time. Some of our senses are like that. For example, our hearing or even our sight consider changes in that way. Like when you go outside and light is 1,000 times brighter, you will think it's only 3 times brighter. Your eyes react in that way. They have like a log kind of sensitivity to change of intensity of light. If physiology is made in that way because, if you need to be adaptive to see in a cave and see when light is very, very little, and then you go outside, you will be overwhelmed by the brightness of a sun. You will not be able to, you will saturate your eyes and your nervous system, and you will not see anything. And so evolution made it in such a way that our eyes respond in that logarithmic fashion. And so imagine if we started to live thousands and thousands of years, maybe we respond to time in that way. We're caring only about changes of time, instead of looking linear. But right now we are very linear human beings. And so even if intellectually we can appreciate what scale invariance means in terms of scale, and nothing changes from a scale point of view, you're right, people care about the linearity. But at the same time, if you go backwards, so this was trying to make a point, when people say we are very early, we are not, because from a scale point of view, all what we have to do is this. All what we have to do is this linear one. So we did all this, right? The mountain went from being a little grain of salt all the way to Mount Everest. Now it needs to be 100 times bigger. There are no mountains like that, but it will be a mountain that goes to space. But still, two order of magnitude, when you actually did already, in this chart we show 6 of them, when you already did 6 or 8, it's nothing. So it's a really relatively small. And what I'm trying to say, that if you care about Bitcoin being 10 million, or if you care about Bitcoin,
yeah, this was going to be my next question. What is the based on the time that we have left, let's say, as you said, when Bitcoin will be...
So we can even calculate it.
Yes.
We can do it together if you like, because I want also to show how to do it to people. So let's do it together. The way to do that is what we just said, right? It's going to be, let's say, 100 times where it is right now, right? So that will make Bitcoin 6 million. First of all, we can do $1 million. $1 million will be, we can do that. Let's say one way of doing it, and you can do it together. Maybe you can look at a scientific calculator in front of you.
Because I'm recording now, if I touch the screen, it will do it. Sorry.
All right, I will do it for you.
Yeah.
So what I'm doing right now, and people can follow along. I'm having in my scientific calculator, and then I say, let's try 20 years, right? So 20 years from Bitcoin birth. Then I divide it by 15 because this is the time that Bitcoin has existed. Then I take this number and I take the power of 5.72 with is that slope that we mentioned before. So if I do that, so 20 divided 15, right? That will be the change, the relative change in 5 years from now. It gives me 5. So let's try 25. I'm going to try. Okay, 25 is a little bit too much because I get 18. I'm trying to get, maybe 18 is okay, right? Because we are at 60,000. So let's see what happens if I take 18 times 65. I get 1.17. So in 18 total, that is basically 18 years total, right? 25. We say 25. 25, if I take 25, I will get a change of 18 that will bring us to 1 million point 1, something like that.
So from the birth of Bitcoin, right? Yeah.
Let's try 24. So 24 will be 9 years from now. So that will be a change of 15. You multiply by 65, you get close to $1 million. So in 24 years since the birth of Bitcoin, that will be basically 9 more years from now, we will get $1 million.
And point here to people is that this is the fit line, let's say, thinking in your mind, the fair value of Bitcoin will be there. It doesn't mean that Bitcoin will not do, because I will jump to that point later with Giovanni, is that Bitcoin tends to enter one exponential phase, which it grows for 1 year, then decreases exponentially for 1 year, and then goes to the fair value line, let's say, that we found, which is the power law. So what that means, what Giovanni said, is that you can open your phone after the bear market is ended, and Bitcoin will be close to that value at that time. So it will be normal for people that are going to be in 9 years from now, as you said.
Yeah, so 9 years we reach a million. That will be the trend value. That will be the trend value.
So now basically Bitcoin for 8 to 9 months now, it's hovering between 55 and 65, let's say.
Right.
So imagine in 9 years
we are just below the trend line.
Yes.
Now we are below the trend line.
So imagine Bitcoin in 9 years will be hovering at these prices. It doesn't mean that Bitcoin could not go before to that value when it enters the exponential phase.
One of these bubbles.
Yes, of the bubbles. But that also it's a good news, because imagine that in 9 years you will have an asset which it will be almost
in 9 years
12, 13x.
You know how people were talking about the 55K club, right? That we were offering there for a long time.
Mm-hmm.
Imagine in 9 years from now, people
will have the million club,
the $1 million club. So it's so boring. Bitcoin is only hovering over a million, 980,000, 999, and it oscillates around that price. Can you imagine in 9 years from now, it is nothing,
Exactly.
It's really a small amount. So when people talk about the power law being too bearish or whatever, they don't know what they're talking about. We are talking about an enormous asset that needs to grow, and this is why it grows with a power law, because a power law is a much more sustainable growth with this crazy exponential growth, and so it still allows these huge big changes, but in a more sustainable way. And it's still amazing, because in 9 years from now we are going to talk about $1 million Bitcoin, like if it was just normal, if it was like the new normal for Bitcoin. Now, it turns out when you do the same calculation, if you take 34 divided by 15, and then you take the power of 5.72 of this ratio, then you get 100 times 107, and that will bring us close to $10 million Bitcoin. And that is only 24 years from now. So in 10 years from now, in 9 years from now, we get $1 million Bitcoin. Then 24 years from now.
This is especially what I say to young people as well, because time is also relevant.
24, it's 19 years from now. Then
imagine someone which is, let's say, 20 years old. He gets one Bitcoin, for example, now, and then comes back 20 years later and it's 10 million. That's huge.
It's crazy.
That's huge. That's huge.
There is no such
and as I said again, the base value. So let's say this is the boring price of Bitcoin. Is not. We are not saying anything about the exponential phases. So now let's, Giovanni, move to the point that we know that Bitcoin tends to have these periods which enters an exponential phase and then an exponential decrease phase where it comes closer to its fair value. I remember you showed me before that you already simulated that and you found it.
So
that's
I
it.
did a different kind of simulations, right? These are the different cycles. And so actually I went a little bit deeper and I started to see, because the job of a physicist never stops. Once you start to have the right framework,
it doesn't end. You cannot sleep.
You cannot sleep. You're always thinking, okay, what is next? What is next? Because in one end, we see how the power law, and by the way, so I took all the different cycles. So let me explain what I did here, right? So I took the different cycle. By the way, the blue data, it's the real data. So let's take this cycle, for example. This was cycle number 2. So the real data is the blue line. And so I'm trying to understand this blue line, and they say, okay, the general pattern, once it goes up and leaves the power law, is to come back and then continues as a power law, right? So it's almost like the bubble didn't exist. But
okay, so this blue line there basically is the cancel out of the two exponentials.
Right. So you see how it goes up and then it comes back. And it's almost like I could draw a line here and say, it's almost like the exponentials never existed. Because look, if you connect this point with this point, it's basically a straight line. And you see this, how this straight line continues along the power law. So this is the power law. So this is the power law before, during the bubble, it's almost like if I had still the power law, right? It's pretty clear. You agree?
Yeah.
And that also basically what we also show from this graph before when we were showing this graph here. When we show basically the that support line. Do you remember how in the support line?
Yes. So basically the bottom line where you can do it with Ransag algorithm, or you can basically do it with various ways. It's like the bottom.
Right. The price leaves the support, it reaches the top, and then it goes back. And it's almost like the bubble never existed.
Exactly.
Right? Here, the bubble never existed. So I'm trying to illustrate this also in these are simulations are called Monte Carlo simulation because the name of Monte Carlo comes from the casinos. And that in Monte Carlo, it's this little nation, and they make a lot of money by allowing people to gamble when it was illegal in other countries like Italy, etc. People went to Monte Carlo. It's close to Italy or France, and people went from these countries and gambled there in this casino. And because you're almost like simulating rolling a dice in the computer. You're creating random numbers over and over again. So it looks like a casino, basically. It's a funny way of calling it.
And in general, in physics, we use all the time the Monte Carlo. For example, remember when I was trying to calculate the refraction of light in a vessel, you basically, because you don't know the direction of the light, you basically do a Monte Carlo simulation of the direction of the light when it bounces on the walls of a vessel. And basically on our life was because before we try to do an experiment or before we try to do something, we try to simulate and see what we should expect. And in physics, the Monte Carlo simulations is something that they use extensively. For example, in CERN and on the biggest experiments in the world, they do Monte Carlo simulations every day.
So, and basically how it works, right? To make it simple, you study the property of a blue line, and you say, okay, the blue line has these characteristics, has this mean, has this standard deviation, and then you calculate a fake data that has the same statistical property, and then you let it play, right? You say, imagine I have a dice that represents the behavior of Bitcoin because it has the same statistics, right? It's going to be a complicated dice because it's not just going to have 6 faces, but it's an analogy, right? You create the equivalent of some random process that has exactly the same type of property. If you add it to describe how many times you're going to get this level of deviations versus this other level of deviation, this kind of returns, the distribution, what we call the distribution, will be the same for Bitcoin and for this simulation. But the single histories, right? Because imagine you're throwing a dice, right? You could do it even with a dice, right? Exactly. You could do Monte Carlo for the dice. You could test it and say, I have a dice, I study the statistical property of the dice, and I made an experiment where the experiment will be how many times you get 6, right? So you basically, you throw the dice, you say, I got 6. Okay, you write down 6. Then I throw the dice again, you get 2. I got 2. Now you can see the sequence of...
And it's a cheat way to find the probabilities, basically. You do this randomized way, and you can find the probabilities of number 1 coming if you roll the dice 1,000 times. Right? It's
and the sequence that you're getting, right? How many times, like, for example, one of the questions you could ask through the Monte Carlo is, how many times I'm going to get in the row 6, right? How likely is that I get 5 6s in the row? Is it possible? How many times is going to happen? So basically you create like histories, right? You create like kind of parallel universes where you roll the dice over and over again, and then you compare the histories. Now with the dice, you can do it using the theory. You can calculate exactly how much 6s you're going to get. You can do a calculation, theoretical calculation. With something complicated like Bitcoin, you cannot do the calculation by hand. So you want to do a simulation. And then the simulation will tell you, if I do this 1,000 times with this underlying Bitcoin statistics, and I draw all the different possible patterns, how many times I'm going to get something that is, kind of close to the center of these different paths, right? What is the most likely scenario? How the most unlikely scenario? How far can I go here? Is there, even if I run it 1 billion times, could I ever see in a scenario where it goes, to $5 million? It will never happen. You can run it 1 billion times, 10 billion times. Here, this is the highest possible price. The real price was this was the second bubble, right? We went all the way to about $22,000, right? So, and you see there were some histories, we went all the way maybe to $23,000. So whatever, right? You see some of the possible histories because of the stats. Maybe it was one chance in 100,000 that the price went a little bit higher. But you can see I can run it 1 million times, 10 million times, 1 billion times.
And only a few times will come to that extremes.
Yeah, it will never go, to $50,000, right, for these cycles. It never happened. I can tell you. I can try to run it 1 million times, 10 million times, because you can run it, right?
Yes, you use two different exponentials, right? One to go to the bubble and one to leave the bubble, basically.
Yeah.
Did you find any similarities?
Yeah, I use the statistic for this component. So I broke it down, right? I broke it down in 3 components. I used this component to explain how we went there. Yep. I used this component to explain how we went there. And then I use the power law to go there. And then I recreate basically like 1 million Bitcoins, like a million possible
paths,
alternative paths or histories or alternative universe. Imagine there is another universe where this was Bitcoin, this was Bitcoin, this was Bitcoin, many different possible Bitcoin histories. And they are all similar, right? They change in the details of the history, right? And people will say, oh, look, this was when Mr. Baylor, not Sailor, but Baylor in another universe, he bought a bunch of Bitcoin, and you see that made the price spike. People try to explain some of the spikes by something that happened in alternative universe, but it was not. There was no Baylor in my computer. It was just math. So math by itself can create strange behavior. You see, look at this here, for example, right? Here I'm trying actually to project it in the future. This is my prediction, because what I wanted to show first that this is a valid way of replicating the behavior in the past. You see, it's doing a pretty good job in replicating the past behavior, and then say, given that has worked in the past, could I use it to predict the future, right? And you see some of my history bring the price to $250,000, right? It's very few, but there was one weird
case, let's say,
that brought all the price all the way to 250,000. And if it ever happened, people will say, yeah, that was because Elon Musk say something good about Bitcoin,
decided, right? For example, to accept Bitcoin to buy a Tesla or something. It was just the computer simulating different paths
that allow that very rare path, because you see almost all the other ones, they don't do that. They do something much more close to what everything else does, right? And so you see how this works, right? And okay, of course you can say, well, here they didn't do a very good job, they didn't do it perfect, because remember, I'm trying to find a very simple equation, one simple equation.
To understand the behavior. If you run the simulation much more times, maybe you will find a case where it actually matched.
Or maybe, if I have a little bit more precise model, maybe, it was not exactly an exponential, it was more complicated. The problem with making the model closer and closer to reality is that you're adding all these
tweaks, let's say, and parameters to touch it,
And you can fall in the error that you are fitting more and more the noise versus the signal, and that is called overfitting. So it's much better to come with something that is close enough, but is simple, and maybe not getting all the details, but it still gives you a very general idea of a general behavior, right? Because otherwise, the blue dots will not come as close as we do relatively to the black lines, right? The black lines do a very good job in kind of telling you the majority, because most people will not even think that is possible. They will think it's all random, there is not really a pattern, there is nothing there. And instead, no, you can come up with a very, very good simulation of what is possible and what is not possible. And
so the
this,
top left, as you said, is the current cycle, sorry, the next cycle, the upcoming one.
And you see, sometimes there are things like this where, the theory didn't predict that, because the theory says we should have gone along here, and we should stay at most here, and then there is something like that. And then, yes, you can say, okay, given that the real data didn't follow exactly what the theory says we should, how do I explain this? And we can say, maybe this was due to the FOMO created by the ETF that pushes the price away. But then you see, recently, you can start it here to see that it corrected, but it corrected even more, right? So things like that are allowed. Like, for example, you see how here also we had this deviation from the trend. But notice what happened. The price went back to the trend, right?
Yeah.
So we could have events like that are deviations, perturbations, but then they tend to go back to the general path. So this is what the theory says, and it seems that is also happening with this, that there is a price correction. Not necessarily will go maybe all the way back, but in general, we are still going to follow the power law.
And I have one question. Sorry for interrupting, because before we leave this, I have two questions from two of our viewers, which they asked, when do you believe the start of the exponential phase of Bitcoin will happen on this cycle? For example, in a month, in 2 months, in 3 months, or later?
Right. And this is trying to do this, and this is why I say days from November.
So you think it's going to start from November?
Yeah. Now,
so if that is
data, right? Yes. In fact, I can check the chart right now. We are 67,000, and we can do, maybe later another episode where we
we'll do, because we have many and already we are running late. But
right, exactly. We can cover all.
We will, and
topics, etc.
So if, for example, here on, let's say, on the start of November was our initial estimation, that means that the peak will be in November 2025, in a year, and then we're going to start then decreasing and start to exponentially go down and find the power line. So basically, if we start in November, let's say, the top price that the your simulation is finding, which I guess is the average of all these paths, it's close to, let me see, 190.80 on the top left. The graph, I think, the red line is the average of the simulated paths.
The red line is the average, right? So basically, I'm using some starting point. Let's say November.
Yes.
It could be.
Yeah, of course, it can shift it, of course, yeah.
Right, it could be now, when maybe we just started the bull run. I don't know, I don't think so, because we don't have enough liquidity. And we can have
agree that as well.
Meeting where we can go on the liquidity, we can go on all the other aspects that I explore. But in this case, I'm assuming, you see how I'm starting close to 60,000 basically. So I'm saying, let's say we start around 60,000, and then this is from November, but it could be October, because in these models, 1 month later, 1 month later.
No, it's okay. Yeah.
Early, it's okay, right? We are not trying to be.
We're not prophets or something. We're trying to simulate and find a model and a best, let's say, way to estimate the future, which is really difficult, but at least we have something in our hands. Yeah.
Exactly. So, and then, I run the simulation, and where did I come up with this data for the future? Well, I use the same variability, the same type of statistical, basically the same standard deviation, the same type of distribution. It's called a Laplace distribution. It's not even a Gaussian. So it looks like the best type of distribution that describes the behavior of Bitcoin is called a Laplace distribution. I took the same type of variability and volatility that we get during the bubbles that we observe.
Actually, it is consistent. Oh, nice.
It's pretty consistent.
Nice.
Between all the different bulls. And
I
so
thought that
I
maybe
used
you
the-
had a factor to scale down because we have these diminishing returns that maybe will also reduce the
the
bubbles.
diminishing returns are overall, but during the bubble, it seems that there is
Nice.
very regular
Nice. I
behavior.
didn't.
What changes is the slope. And, the slope of, basically not the slope, but the growth factor.
The growth factor that is in front of the exponential, basically. Or no?
Yeah, so
yes,
you
yes.
will have exponential alpha time, right? And so that alpha tell us how fast we are going up, because that has changed over time, and I can show you a graph for that. And actually seems that there is a pattern of how these exponential changes over time.
Nice. I will be really interested to see that, and also try to make myself a Monte Carlo simulation to play around.
Yeah, you should try to replicate it. I can give you information of how I did it. But basically, I measure, here it is. See, I look at, I made exponential model. So it's not perfect, but remember, this is what we call the log linear, right? So I take the log of the price versus the time, and this is the time since these are days from the beginning of the bubble. And then you see
already the slope. Perfect. You can see the slope already.
They kind of follow a straight line. That means they are exponential. This is why it's not so much. You could argue about this. It's a little bit more complicated, but overall,
the 2 and 3 is really good. Yeah,
2 and 3 almost perfect, right? With some variability. And then you measure the slope, and that slope will give you how fast this exponential is going up. Now, when you do it with when we go down, is much even nicer, right? And very, very good fit with exponentials, almost perfect, like we say, given the variability of the data. And not just that, it seems also that they go down with the same rate. That is really interesting. Bitcoin has all these regularities.
It's really interesting, yeah.
It's very interesting, right? That it's going down with the same rate over the different cycles, and it's about 0.22% per day, something like that. While with the bubbles, when we went up, we went up almost 1.2% per day when we were here. This is more like 1%. This is 0.45%. And now, if you put all the different returns, so there are many different ways of doing this, but one way is this one, because we want to kind of make a prediction of how steep the next one will be, even if we don't have a lot of data, but we can try to do our best with the data we have. So one of the things you can do is calculate, you could calculate the deviations from the trend of these bubbles, how big they are, or you could do this where you calculate the annual returns. So I'm averaging the annual returns over 1 month. And then you see these ones are the peaks, the different bubble peaks. This one was the first one, the second one, the third one, the fourth one. You see?
Yeah.
Is where the peaks are. And then actually it's an exponential.
Yeah.
So it looks like the decay of the tops, it's like an exponential, very predictable exponential. And then you can say, because that is also what happens with all these peaks, they seem to happen at very precise times from when the bubble starts. They usually happen about the end of that year. So this was November of that year, like in this case. So sorry, this one was November of 2013. This was November of 2017. This was November. November.
Yes. Well, the double peak was on the
that area. So November of 2020, and so on and so.
So based on that, the top is going to be close. I was going to sorry. Yeah, finish.
Yeah, go ahead.
So I was going to ask that. Okay, so we understand that the top will be close to 180, let's say 190, somewhere there. Let's say the average. But then when we have the decrease, where is the bottom? Let's say on the power law, close to 70. Yeah. 70,000.
Yeah. So yeah, from this, given that we know more or less when the bubble is going to happen, right? We can say it's going to happen in November 25, right?
Mm-hmm.
So you can extend it, and say, okay, if that decay continues, where is going to be, right? It's going to be here. And here, so this is a slightly different way of doing it. You can do it with the deviations from the trend. You can do it with the returns. And they all kind of converge to a similar number, anything between 200 to 250,000, something of that order. And so it's going to be here. And if you translate that top in terms of growth, so we say this was 1.2, this was 1% a day, this was 0.45% a day, this is going to be 0.33% a day. So I use that statistic, so how fast the exponential grows. I use the deviations from the standard deviation, the fluctuations, the size of the fluctuations typical of these bulls, and then this is what I get. These are my simulations. So, and then I use also the decay, the observed decays, because this observed decay seem always to be consistent. So I use the same type of decay that we saw here. We saw this. You remember how regular it was. It's about, when we go down about 0.22% a day. It's much slower as a decay. We go faster up, and then we go down slower. And when we go down slower at this rate, and you put all these two pieces together, this is what you get. These are basically, you're looking at a simulation of the next 4 years ahead of us. It is kind of crazy to even try to.
It's crazy. I would love to come back to this, and I hope you're right.
And compare it. As we get more data, we can superimpose and see how well we are doing.
That would be nice.
And so, because we have a record here, and I am a scientist. I'm interested in truth, right?
Of course.
I'm wrong. If I am right, I'm right. It's nothing to do with me. We are trying to understand. We are trying to use the tools of science to come up with the best possible understanding of what is happening in general. Just as a scientific phenomena, we're trying to study, because science is all about prediction. People don't realize that too. That this is how we know we understand something, because if we can predict how it behaves, then it means we are really understanding it. And so it's very important to make prediction. It's a way of testing your theories and ideas. And so if Bitcoin continues to follow, it will be some variation. It could be that there are big deviation like here, like it did here. But in general, the average should follow this. It should reach a part. Now, do we go to 150? Yes, it's possible. It's in the realm of possibility. And we go to 300, it starts to be very unlikely.
And an interesting path here that I see, the worst case, let's say, from the paths that you simulated, it seems to be close to 160. 1.5, 1.5. Yeah, I mean, on the peak.
We should not go more than 1.7 or 6, right?
Mm-hmm.
We can,
which is close. Yeah, that's nice.
I will transform this in probability, right? Because you can look at how many of these paths
exactly
a certain range, and then I can make another chart where I show how likely it is.
Yeah, the likelihood.
Here, how likely it is with allowed and so on. But you can only see with your eyes that this is the possible range.
So it seems like the 150K, it's like nice. It's like we are feeling confident.
Higher, higher than 150.
Yes.
All the way to maybe 220, right? That is possible. Anything above that starts to be very, very,
very unlikely. Yeah, that's nice.
So when you talk about 500,000, a million, it's like saying that we are going to have elves appearing in our garden at any moment. It's like, okay, we can calculate the probability.
Yeah, that's a point that actually, but I think I will leave it for our next talk, because I was going to touch a little bit on the stock to flow, which he has this huge range from 250 to 1 million on this cycle.
Let's have another episode.
Yes, we're going to have one. So to let our viewers know, we're going to have another episode and discussing the stock to flow and the Michael Saylor models with Giovanni, because I know that he checked them. And also also I'm interested on his idea on and his research on the global liquidity and how it affects Bitcoin. And then we are planning to make much more stuff with Giovanni, so stay tuned. And we are going to use our knowledge to learn as much as possible on Bitcoin and let you know our findings. And Giovanni, let's leave it here. What you say?
Yeah.
Okay,
and
great.
maybe like you were saying, where we go back, right? We go back to something close to
70,
65, 70, something like. And then we continue, right?
They continue up, and then imagine that
and then
we stay above 100.
Over,
Yeah, that's nice.
Yeah,
that's good news. I think for everyone. So it was really nice. Thank you for coming.
Pleasure.
It was. I think we can talk for hours, so I hope we don't bore our viewers.
Next time we go a little bit deeper.
Yes.
Also now to use this.
Exactly. This is the next step. I wanted people to know a little bit the importance of understanding this, because then you will feel more interested, because anything what me and Giovanni said today is not a financial advice, it's just our findings. And you see us engaging with this stuff because we are feeling more confident, because we sat down, we did the maths, we check it. And this is what we are doing basically. And we are saying you what we believe. But the best way for you to sleep like a baby at night is to actually do it yourself, understand it. And then when Bitcoin deviates from its power law line, you will not freak out and actually be prepared. And actually you will know when this model, if for some reason is invalidated in the future, you will understand why, and you will find the point which is it is, and you will be prepared. And that is the power of knowledge, to understand something. But anyway,
exactly.
I hope you also like our talk. And until next time, bye-bye.
Bye, guys.